All right, thank you all for tuning in to WJC 98.3 FM, your voice and music, your station. My name is Jeff Badu, and I'm a parallel entrepreneur and a wealth multiplier. I'm the founder and CEO of Badu Enterprises, LLC, which is a multinational conglomerate in the finance industry. And today we're here to talk about marriage and finances, basically talking about money and how to go about it in the sense of a marriage as a wedded couple, a marital couple, essentially giving you best practices, tips and tricks as to how to go about finances in your marriage, whether you're about to get married, you're currently married and maybe having some financial trouble, or maybe you're not having any financial trouble at all and you're just looking for a quick refresher. Well, thank you all for tuning in to WGHT 98.3 FM, your voice and music, your station. This is the show Money Talks, where all we talk is money and nothing else. We will be adding a little twist today with marriage or finances in marriage. So I'm just going to give you about 8 to 10, depends on how much time we have, 8 to 10 tips and tricks to how to master finances in your marriage. But before that, let's kick it off with the market report. This report is as of July 17th, 2020. Stock surged early last Monday, only to fall back by the end of the day. Earlier in the day, the S&P 500 reached its highest level since the COVID-19 pandemic sent equities reeling. The NASDAQ hit another record high in early trading. Unfortunately, stocks couldn't hold their values as states hard hit by a growing number of reported virus cases began to rein in on reopening measures. So, for example, the state of Texas, Florida, Arizona, Atlanta, these are all states experiencing very, very high COVID-19 numbers. And even Chicago announced that they'll be phasing or scaling back to phase 3 as of this upcoming Friday. So that is something people should be basically just watch out for if you're a business owner, or if you have something planned in advance. Just make sure you look at your state restrictions. If you have international travel or anything planned, just always be cautious of the restrictions because that can determine whether or not or to what extent you can actually do something nowadays. And these restrictions change basically on a monthly basis. So you have to monitor them at least on a monthly basis. I would say weekly, but I would say at a minimum on a monthly basis. You have to really see what your state or what the restrictions are in your state. European stocks climbed last Monday as the Treasury bond yields. Crude oil prices dipped ahead of an OPEC meeting that could result in plans to ease production cuts. Equities rebounded last Tuesday as the Dow rose 2.1%, the S&P 500 climbed 1.3%, the NASDAQ, composed mainly of technology stocks, and that's the biggest winner of the year so far, advanced 0.9%, the Russell 2000 gained 1.76%. Treasury yields slid 3.91%, while crude oil prices jumped 0.85%. Market sectors advancing last Tuesday included energy, materials, industrials, and consumer staples. Optimism about progress on the COVID-19 vaccine. So there's been some progress on a vaccine, alleged vaccine, spurred investors last Wednesday. By the end of the day, the Russell 2000 jumped 3.5%, followed by the global Dow, which advanced 1.3%. The S&P 500 gained 0.9%, the Dow increased 0.85%, and the NASDAQ rose 0.6%. And by the way, if you're not in pharmaceutical stocks, you might want to get in as soon as possible, like today, because they are definitely on the rise. Stocks such as Novavax, Moderna, Inovio, these are all very, very, very hot pharmaceutical stocks that just continuously take off. And during the time, I was telling somebody the other day, and that when there's a problem, whoever has the solution to the problem is the biggest winner usually. So if the problem is a sickness, whoever has a cure or vaccine for that sickness is the biggest winner. And by the way, technology is one of the cures to COVID-19 as far as us being able to do things, because without technology, we wouldn't be able to do really anything. We couldn't really meet face to face, or in person, I should say. We couldn't do things as efficiently and as effectively as we wanted to. So keep in mind that one thing that is helping us nowadays is technology, and that's why tech is up this year. So I wouldn't think of COVID-19 just from a health standpoint, but I would think about it from a financial, basically from a needs analysis, as what's actually helping us get through these times right now. And you will notice that pharmaceuticals and technology are actually the two big things right now. And of course, things like grocery stores and other defensive items or defensive stocks. So let's see where we're at. So crude oil and treasury yields grew while the dollar fell. Banks led financial stocks higher, and energy stocks also climbed. It's a great opportunity to make money, by the way. And yes, investors are not actually all that optimistic right now. They are, I would say, they're not super optimistic. They're pretty much being cautious, and they're very, very fearful actually for the future. I mean, in general, investors they're cooling off a little bit as far as what used to happen or what happened earlier this year back in March and April. So now their nerves are a bit calm, but COVID-19 hasn't gone away, so there's no way that they would be all that optimistic. Remember, the thing that drives the stock prices is simply supply and demand. Who's buying and who's selling. If there's more people trying to buy, then it increases demand, meaning it increases stock prices. If there's less people looking to buy, then you get reduction in demand, which means lower stock prices. That's all stock prices are based upon. It's simple economics, supply and demand. But a drop in technology shares pulled stocks lower last Thursday, ending a 2-day rally. The Nasdaq fell 0.7% as Microsoft, Amazon, Apple Inc. Lost value. The Dow dropped 0.5%, and the S&P 500 sank 0.3%. The Russell 2000 fell 0.7%. Treasury yields declined 2.9%, and crude oil prices decreased 1.2%. Stocks were mixed last Friday as the S&P 500 and the Nasdaq posted modest gains, while the Dow fell for the second consecutive day. Within the S&P 500, the healthcare sector soared to a record high. Other sectors advancing last Friday included utilities, real estate, my favorite, and materials, while financials and energy lagged. For the week, only the Nasdaq failed to post a gain, while each of the other indexes essentially advanced. S&P 500 gained 1.2% or 1.25%, and is less than 0.2 percentage points from its 2019 closing value. For the week, the Russell 2000 led the way, climbing 3.56%, followed by the Dow, which rose nearly 2.3%. The Nasdaq, despite losing a little more than 1%, is still more than 17%. My goodness, 17% ahead of its 2019 closing value or ending value. Treasury yields ended last week about where they started, while crude oil and gold each closed the week ahead. Price of crude oil is up $40.32 per barrel to $40.58 per barrel. Price of COMEX gold is up from $18.01.40 to $18.12.20. So gold is looking pretty good right now. So far this year, the Dow Jones is down 6.54%. The Nasdaq is up 17.06%. That is huge, by the way. While the world is suffering and worrying about COVID-19, the technology stocks, the Nasdaq, is up 17%. That tells you something. That this industry is here to stay. They won't go anywhere anytime soon. So you had better put your money into some tech stocks if you don't have anywhere to park your money right now. S&P 500 is down 0.19%. The Russell 2000 is down 11.70%. The global Dow is down 8.96%, and the federal funds target rate is currently at 0% basically. So interest rates are 0%. 10-year treasuries are at 0.62%. Very, very terrible. A few things to look ahead this week. The housing market is front and center this week with the latest reports on sales of both existing and new homes. Sales of existing homes are expected to rebound in June from May's nearly 10% decline, which is huge. On the other hand, new home sales soared in May and could retreat in June. So basically, more and more people are buying existing homes as opposed to building new homes, which is quite interesting. It actually makes sense because there's probably restrictions due to COVID-19 on building a new house, or at least selling that new home that was built. So that's the market for you. Basically, if you can get in. It's recovering. The S&P 500 is basically back to where it started at the beginning of this year. Technology is up 17%. I mean, these are pretty good numbers. So as you can see, even in the bad times, the market can still hold up on its own. So in the stock market, if you looked at a 50-year chart, you'll notice it only goes one direction. It goes this way. It goes exponentially upward. So ultimately, I mean, the point here is you have to get in. How you can get in? Find a way to get in. Whether it's $1, $20, $1,000, $100,000, get in somehow. Do your research. Once you've done your research, get your Robinhood, your Acorns, your TD Ameritrade, whatever app you decide to use. But the stock market is, I mean, it's a good place to be. I'm more of a real estate guy, but the stock market I love too because you can make some pretty easy money if you know what you're doing. And it's quick. It's nice, easy money. There's some long-term play in it. Me personally, I'm more of a long-term investor. But you can make some quick money. For example, pharmaceuticals. If you know pharma is going up, I mean, it only makes sense to put some money in and watch it grow until they either, basically, once they find that vaccine that actually works and can cure people, I mean, their stock prices are about to go through the roof. And then once COVID-19 dies down, then you pull your money out of pharmaceuticals and maybe put it into something that was down during the pandemic. Maybe manufacturing, maybe retail, whatever it is. I mean, Amazon will never go anywhere. Amazon is here to stay forever. And Amazon is a retail company. So you do have to pick and choose the company you want to invest in. So we're at 7:15 here. Let's go right into the topic. Money and marriage, best practices for married couples. So as you all may know, finances are one of the top 3 reasons for divorce, especially in America. Divorce rates are extremely high right now, over 50% divorce rate, which is pretty scary, especially for somebody who, let's just say that you're interested in getting married in the near future, or you're looking to tie the knot basically with somebody. To see the divorce rate, to see the fact that finances tend to be a big problem in marriages today. I mean, or in history, it's always been a problem. And then also you have COVID-19, which is really affecting couples as far as maybe having kids, maybe delaying plans for that, plans to move to another state. Basically just delaying a lot of things. Even wedding ceremonies are being delayed nowadays because of COVID-19. So it's not the best picture in the world when it comes to marriage, which is probably why you might see that marriage rates have been going down, especially with the millennial generation. So today I'm not here to counsel on marriage or talk about how to take care of your spouse or anything like that, or give you some psychology tips or anything like that. This is strictly about finances. So just giving you some best practices. Once you get married, or if you're currently in a marriage, these are some things that you might want to consider putting in place. The first thing is you need to make sure that so it's not necessarily the first thing, but let me just go down the list. You need to have a budget in place. So a budget that is for the household. The way it works typically is you have a joint budget, right? A budget that says, okay, these are the household bills. $1,000 for rent, $100 for utilities, $100 for the phone bill, $300 for food. Let's see what else. Maybe spending money, whatever it is. Lay out a budget. The only way to get these things down is to lay it out on paper or use an app such as mint.com, mint.com. Create a joint email account, link it to the joint Mint account, and get a joint bank account that pays all of these joint expenses. The way I see marriage from a financial standpoint, it's a partnership, basically. So the same way that partners handle their finances, it's the same way that if somebody needs to spend money on something and they're using the partnership's money, funds, they need to make sure that they get pre-approval or pre-authorized from the other partner to make sure they can spend this money. So when it comes to marriage and finances, communication is very, very important. It's of the utmost importance to communicate. But basically, have a joint budget in place. And then you can certainly have your own personal budget. Maybe you have a few things that you pay on your own. For me, I'm a big fan of consolidating everything into the joint account. That even includes student loans. Anything that you guys know for a fact that you're sharing. Keep in mind, it's a marriage. It's a 50-50 partnership. It's something that you're going into saying till death do us apart, through good and the bad times, right? Through health and through sickness. So it's not about, he was making $100,000 and I was making $50,000. So let me come in at 25% and he'll do 75%. I believe that everything needs to be laid out on paper. Every single bill that you have, any money that comes out the bank, outside of business expenses, and we'll talk about business in a second, but outside of business expenses where you may have a bookkeeper or you may have an office manager or somebody who's managing that type of stuff, I'm talking about straight up household expenses. You should have a joint bank account that takes care of the budget. So first step is lay out the budget. Lay it all out. This is not the time to hide, okay, maybe you spend $100 on child support of a baby that your spouse never knew about. That's right. The time to bring stuff like that up is before you get into your marriage, not after. And hopefully your spouse would have found out that you have a kid somewhere. But a hidden child support bill, these things will show up. Because in a marriage, things get so close. Like, you guys are so close to each other. You have access to everything. Marriage is not the time to hide things at all. It is the time to be fully transparent. Lay it all out. If you know you have a certain bill, don't be embarrassed about it. At least take some time, pray over it, do whatever you need, take some time. But ultimately, make sure that your spouse knows. Transparency is very, very important when it comes to marriage. Lay it all out. So lay everything out on paper. Student loans, the mortgage, utilities, lay it all out. And then you can come to the decision. In my opinion, I think each party should be contributing 50-50. But that depends on the circumstances. Maybe somebody's in school. In that scenario, I wouldn't expect that person in school is contributing 50%. Right? That's just unrealistic. And I'm talking about full-time student, by the way. Or maybe they just went through a big hardship. Or maybe they went through something that is damaging their finances. Now, I would hope that you know these things beforehand that allowed you to make your decision and actually marrying that person. Because when you tie the knot with somebody, you tie the knot with all their debts. You tie their knot with all their wealth, everything. It's 50-50. It is not the time to hide anything. You have to lay it all out. And I mean everything. Lay it all out on paper. This is somebody who you're about to spend the rest of your life with, hopefully. Right? Hopefully there's no divorce or anything like that. But you're about to spend the rest of your life with somebody. It is very important to be transparent and to lay it out. Not hide anything from that person. Because the moment you hide something, the moment the person finds out that you're hiding something, it removes the trust factor. And that's what leads to even more problems, infidelity, and all these other crazy things that happen in marriages. So my advice to any newly wedded couple or even currently wedded couple, even if you've been at it for 20 plus years, then transparency is extremely important. So it's of the utmost importance to be transparent, lay it all out, use apps such as mint.com, have a joint bank account. So step 2, or my second part, is have a joint bank account that has all of the sort of bills, the joint bills coming through. So you have that joint account, all the bills, all the auto pays get changed to that account. I mean, if it gets to the point where it's a lot of bills and you can possibly use a credit card instead and then pay off that credit card using that joint account every month, then so be it. All right, so this is a way to strategize. Me personally, my bills are typically paid through a credit card. And then at the end of each month, I clear out the balance so that it's left with zero. I clear it out with whatever account it was designated for. If it's a business credit card, I clear it out with the business account. So for now, at least a business checking account, at least a joint checking account that has both of your names on it, and then clearly lay out who's responsible for what, basically, or what percentage are we contributing to the joint account. So let's say your budget is $5,000 per month and you agreed on 50-50, then I would expect that each person, let's say on the 15th or shortly before the bills are due, each person deposits 50%, so $2,500 per person, into the account. And I recommend you have at least 3 months worth of those bills in the account, just in case there's a shortage during some months. So 3 months of the bills amount should be in the bank at all times. It's very important to save money. Next, which ties back to what I mentioned, assign roles and responsibilities. So basically, who's in charge? Who's the main person in charge of the finances? 2 leaders tend to butt heads with each other. So you need to assign a main leader saying, okay, since you're a financial expert, for example, for me, it would be expected that I'm in charge of, or I'm the primary person in charge of the finances. Because finance is what I study. Finance is my specialty. Finance is what I live and breathe every single day. So if your strong suit is finances, make sure that you're the person that is taking the lead. Basically, you're the person that's analyzing the budget. If you see a problem somewhere, you're calling out that problem. You're talking things out. So make sure that you assign roles and responsibilities. Perhaps who makes the transfer every single month. Is it an auto transfer that comes from your work account, so your paycheck account, where it goes directly into the joint account, or is it some sort of manual process? Who's responsible for the investments? Basically, make sure that you know who's doing what. That way, nobody's confused as to, why didn't X amount of dollars get transferred into this account? So that is something to keep in mind, is that ultimately you should be assigning roles and responsibilities based upon the specialty or the interest of the person. So if somebody does not, and even if your spouse is not interested in finances, get them interested in finances, because this is your partner. Remember, just because they don't know anything about money doesn't mean that they can't learn something about money. You'll be surprised once somebody learns something about money, how more interested they start becoming in the topic of money. So if you know how to trade stocks, teach your spouse how to trade stocks. If you know how to buy real estate, teach your spouse how to buy real estate. Remember, this is a partnership. This is a 50-50 thing. This is something that you're getting into for the rest of your life, and I think that's the part a lot of people don't understand, is they think this might be a 5 or 10 year deal. This is a lifetime deal. This is not a 5 to 10 year deal. You get in it, you sign that dotted line to death do us apart, well then so be it. You're in it forever. You're in it for the long run. So just to reiterate, have a budget that's very transparent, laid out, and kept on track on a monthly basis. Have a joint account that pays out all of these expenses for the joint, or for the joint budget. And then also assign some roles and responsibilities so that everybody's on the same page as to who's doing what, basically. Next is of the utmost importance, and we actually talked about this last week, but it's so important that I will reemphasize it or reiterate it. Set up an estate plan, especially once the first child comes in. So we talked about, for those that didn't catch the last segment, it is recorded. It's on the Facebook. It's on soon be posted on YouTube, and it's also on Instagram. But make sure you have an estate plan in place: a will, a trust, letter of instruction, medical power of attorney, financial power of attorney. Make sure you have these things in place. That way, if your spouse were to pass away, remember, anything can happen, especially in this COVID-19 world that we live in. Make sure you have that estate plan. At a minimum, you guys should have a will. Anybody who's married right now who's listening should have a will, at a bare minimum. So set up that estate plan, especially when the first child comes in. Basically, when the first child comes in, that's when the trust funds must be created. So make sure you have these things in place. Always consult with an estate attorney so that that person can help guide you throughout the year on certain decisions and can help you formulate that estate plan for you. So that's something to keep in mind. And then other advice is to host monthly finance meetings. So just like a board of directors hosts meetings either monthly or quarterly, as a couple, I think you guys should have at least a monthly finance meeting. I'll tell you, my household, we host a finance meeting once a week. That's how serious we are about our finances. But ultimately, host a monthly finance meeting at a minimum, and that way everybody's on the same page. You can start tracking, okay, how's the budget looking this month? Are we short? Is there a hardship? Does somebody need to pitch in a little bit more? Are we meeting our savings goals? Are we investing enough? So these are all things that are very, very key to talk about. So this is a way where you can retweak. Basically, you have to really treat this thing as a business. I mean, you got to treat it like a real partnership. Look at it from a financial standpoint. Look at it as if you're operating a business, and that you have a budget, you have the joint account. Are you meeting the budget? Yes or no? Are the contributions being made on time? Are there certain issues that we need to discuss? Does somebody need to pick up maybe some extra hours? These are the things that married couples do not do today, and that's why finances, and not even the lack of finances, but it's simply the lack of financial management is what's leading to the high divorce rates. It is one of the top 3 reasons for divorce, and even going back to the biblical days. I mean, it talks about finances tremendously. But finances are definitely one of the biggest issues among married couples today. And I'm fortunate enough to be an expert in that area. And so hopefully, I'll never have money problems. But essentially, it could come up. And then somebody asked, my wife is signing a prenup. Not kidding. I don't think a prenup is a bad idea. Me personally, I don't believe in it. Believe it or not, I personally don't believe in the whole prenup concept. It's very debatable, but basically, I think you're setting yourself up for failure. I mean, you're, in my opinion, you're setting the marriage off on the wrong foot by having a prenup, unless you really have some very, very important assets that you need to pass down, or I don't know, something. I mean, these are all things you can clearly lay out in your trust or in your will. So to me, the whole prenup concept, I don't believe in it. I believe that if you're about to commit your life to somebody for the rest of your life, then to me, there's really no need for that. I mean, in a way, it's kind of setting yourself up for failure, in my opinion. I definitely understand the reason behind it. But for me personally, I just wouldn't sit too well. I don't think it's great conversations at the dinner table if we know there's a prenup in place. It just makes me personally a bit uncomfortable when I'm talking about finances with my spouse, knowing that there's this big prenup document that we signed. It definitely could be helpful. I would say definitely take that at your own risk. Me personally, I'm not a big fan of it. And some people are like, hey, what's yours is mine, what's mine is yours. We came into this together. We'll leave this together. So it is debatable. It is very debatable. I would say I'm kind of in the middle on that. I'm leaning more towards the side of don't do a prenup. But if you need to, for whatever reason, if it makes you feel more comfortable, and if you've clearly communicated this with your spouse, then you can go ahead and do that. So that's ultimately what I would recommend. If anything, the estate plan will help correct some of these things. The estate plan will tell who gets what, when they get what, estates. Trust funds, for example, are protected, or some trusts are protected from an asset protection standpoint. Retirement accounts are protected as well. So, I mean, for me, I'm just not a big fan of it. I know some attorneys that highly encourage it. I personally spoke to my attorney, and we talked about the topic. I mean, we're probably going to do a segment on it or something. And I just said, hey, I'm not a huge fan of it, but if it makes sense, then so be it. And if both spouses agree, then so be it. I'm personally not comfortable sitting at a dinner table with my spouse talking about money when I know there's a prenup that's also in place. But these things tend to get communicated as you talk more. Remember, transparency is everything. Don't hide things. Don't basically try to lay it out. Be honest. Be honest with yourself first and foremost, and then also be honest with your spouse. If there's no honesty, there's no trust. If there's no trust, there's really no there's really no marriage, honestly. How can you have a marriage without trust when both parties don't trust each other? There's always clashes. I mean, you're better off just being single at that point. And that's what leads to the divorce. That's what leads to all of these things. So it's very important. And times will get hard sometimes. Somebody will lose their job at some point. Somebody may become disabled. I mean, marriage is really a test. Of course, I haven't gone through it yet. I'm just speaking from what I've heard, from what I've learned, and what I expect a marriage to look like. But marriage is a test. Marriage is filled with battles. Marriage is filled with trials and tribulations. There's definitely goodness of it. But it's definitely something that you always want to keep in mind, that that you have to make sure that you're transparent. Next is, here's my favorite, is make sure you hire an advisor on your team. If you're not good at finances, or if you know that you two, both of you, don't have the expertise or the skill set, then make sure you bring in a third party, such as a financial advisor, expert, or coach. Somebody who understands money, especially understands finances with married couples. And is not just there to sell you some insurance plan, but really somebody who's there to look out for you and your finances. And maybe have them involved in maybe a quarterly meeting. So you and your family meet on a monthly basis, but maybe meet with this person quarterly to assess how your financial plan is going. Basically, to make sure that you have a nice plan in place so that everything is good. That you have that nice third set of eyes that can really look at things from an unbiased and just just looking out for your best interest type of deal. So I think it's very critical to have an advisor, somebody on your team who understands money. If you guys are both comfortable, then you might not need an advisor. Maybe it's the attorney. Maybe once a year you hire somebody to come in and take a look and make sure everything is being allocated correctly. So that's something to keep in mind there. Now, another thing that I would recommend is to set up some sort of family LLC or business. It's very important. So I mentioned earlier that you should have your joint bank account. I think that account should be a business bank account, especially if you're a business owner. It only makes sense. All your bills that you can tie back to your business should be going back to basically, like, all your bills and everything should be getting paid out of the business bank account as opposed to a personal bank account. So instead of having a joint personal bank account, you guys should have a joint business bank account, especially if you're business owners. It's nice where, for example, when you're traveling, you can tie this back to your business. Now, it is important to make sure that business is actually generating revenue. So this is not just some random business that you're starting. This is actually a business that can really help the family. It can be anything, maybe some side gigs. It can be insurance. It can be taxes. Whatever it is, just have some sort of joint business where you're both involved in the business. You're both listed as owners of the business and have all your expenses channeled through your business. All business expenses, of course. And as a business owner, you can typically channel everything through your business. And then last but not least, make sure you invest and save some money. That's whether you're an individual, whether you're a business. Just make sure that you are basically just make sure that you're investing. Like, you're investing for the future, and just really taking care of business when it comes to that. So one thing to note is that even like whether you're an individual or whether you are a married couple, that you should in fact be investing and saving. To save, how much to save is 3 to 6 months worth of monthly expenses. So 3 to 6 months in the bank at all times. If your expenses are $1,000 a month, you need to have at least $3,000 to $6,000 in the bank at all times. And then also with that, you also need to make sure that you are investing. So you're investing for the future. You're not just letting money sit and wait around all day in the bank. So once you get past the 6 months, definitely make sure you're investing, or maybe you're closer to 6 months, make sure that you're investing some of that money as well. So just to recap, a few things, a few tips and tricks to have a successful financial life in your marriage. First is have a budget in place. Second is have a joint account, preferably a business account that has all of your expenses being channeled through that business account. Third is assign roles and responsibilities. And then also set up an estate plan. So very important to have an estate plan. That way you know when it's all said and done, you know who everything is getting passed down to. Especially once the first child comes in. It is very, very important. And then also host monthly finance meetings. So that's another important thing, is to make sure you're hosting monthly finance meetings. Hire an advisor on your team who can really give you some great advice and is there to serve as the third set of eyes for everything. And then set up a family LLC or business. That's another thing that ties back to the joint bank account. Last but not least, make sure you're saving and investing money, just as you should before the marriage. Just basically while you're in the marriage, make sure you're saving and investing as well. So that's everything that I wanted to talk about today. Glad you guys, hopefully you guys gained some insight from that. And if you need anything, please feel free to reach out to me. Phone number 773-679-7198. Once again, 773-679-7198. You can check out the website at jeffbadu.com, jeffbadu.com. You can email me at jeffbadu@gmail.com. Be more than happy to help you out. If you need that third set of eyes to help you, definitely be more than happy to help out. If you need the family's tax returns to be done, certainly can help you out with that. But that's it for the segment. We'll be back same time, same place next week. So thank you all for tuning in to WJC 98.3 FM, your voice and music, your station. My name is Jeff Badu, and I look forward to continuously delivering you all some content. Thank you.